We're about a minute in. I'll kick us off. So hello, everyone, and welcome. Thank you for joining us today for the Earth Month webinar hosted by Saïd Business School at the University of Oxford. It's a great pleasure to see you all today. Just a quick note before we start, a bit of housekeeping. So we are recording this session. So just be aware that that's the case. We're recording the session and we'll be sharing it amongst those who have joined at the end. If you have any questions, please do feel free to add it to the chat or the Q&A. We'll be monitoring that as we go. And we'd be keen to hear from you. There is a point where we'll be doing a poll halfway through, but we're keen to hear your thoughts as we go. So do engage with us. There's a number of us with us today, but I just thought I'd start by getting into what the Earth Month campaign is all about. So I'll hand over to Christine now, who will say a little bit more about it. So, Christine.
Hello and welcome everyone, and happy Earth Day to all of you. So thank you for giving up your morning, afternoon, or evening to be with us to celebrate. And like what my colleague Alex said, we appreciate that you're here with us. We are hosting this Earth Month webinar from the Saïd Business School at the University of Oxford. And today's session supports our broader Earth Month campaign. As a school, we're deeply committed to shaping a more sustainable future, not just through research and teaching, but through partnerships, practice, and people. We're very proud to offer programs that help professionals move from compliance to impact and from short-term goals to long-term value creation. So thank you so much for being here. And now we are very excited to introduce our hosts for today. We have our program directors, Amir Amel-Zadeh and Alexis McGivern. Amir is the Associate Professor of Accounting and Academic Director for Oxford Sustainability Reporting and ESG Data Management Program, our ESG and Sustainable Finance Strategy course, and the Oxford Bank Governance Program. So very busy in those three roles. And of course, we also have Alexis McGivern. She's the co-program director of the Oxford Sustainable Business Program, and she is the head of stakeholder engagement and research fellow at Oxford Net Zero. Over to you, Amir and Alexis.
Hi, everyone. Great to be here on this webinar, and great to see so many people have joined us. So please feel free to put in the chat, as Alexis has written, where you're dialing in from. It's always interesting to see where everyone is joining us from. As Christine said, my name is Amir Amel-Zadeh. I'm an associate professor of accounting, so I teach accounting at the school. And as you know, more and more, we are not looking only at financial reporting, but also at sustainability reporting as a key reporting issue for corporations and other organizations. And hence, we have joined forces with AICPA-CIMA to create exciting new courses for this particular purpose. So one is the second one on this list here that you see on the slide is ESG and Sustainable Financial Strategy course, which is already a year in existence and is particularly aimed at CFOs and financial managers who want to engage in a sustainability transformation of their business and trying to understand how we can incorporate sustainability into the broader decision-making framework, particularly financial decision-making and financial management. And we are now launching our sustainability reporting and ESG data management program, which really focuses on and zooms in on the reporting aspects, in particular, given the drastic regulatory changes that you are obviously witnessing worldwide with the ISSB and sustainability reporting standards, but also European regulations that are coming in and being rolled out more dramatically, and then changes, of course, some tensions with US blowbacks, and there's lots to unpack and think about as an organization, particularly as an international organization. I'll talk a lot more about this course in a minute, but I'll hand over to Alexis to say a few words.
Thank you so much, Amir, and thanks everyone for being with us today. It's so fantastic to see where everyone is calling in from, so thanks so much for taking the time. My name is Alexis McGivern, and as Christine mentioned, I'm the co-director of the Oxford Sustainable Business Programme, which we'll speak about more in just a minute, but is a fantastic collaboration between the amazing strategic insights at the Said Business School, my own home institutions of the Smith School of Enterprise and the Environment, and Oxford Net Zero, which represent a collective of academics working primarily on climate change and racing towards global net zero by 2050. So I sit in the Oxford Net Zero Research Group, which is around 40 academics all working together, physicists, biologists, legal scholars, financial scholars, and more, all coming together, and I sit in a role that translates all of that interdisciplinary understanding of net zero for practitioners. And so our work focuses mainly actually on the standards landscape, so trying to translate this massive global goal of net zero by 2050 into organizational practice for companies and other non-state actors like educational institutions or financial institutions. So really understanding what it means for a business to contribute to global net zero. And I work on the Oxford Sustainable Business Programme, which brings together some of the experts and scholarship on strategic insights on sustainable business, as well as the scientists that I work with and translating net zero on its sort of climate physics level, and then as well as the standards, so understanding the sort of voluntary landscape of standards. So we bring all this together in a week-long course, and I'm really delighted to see that we have some alumni from our program last year tuning in, and we'll speak about it more in just a minute, but really delighted to be here, and thank you so much.
So just to dive into the partnerships aspect a little bit further, so in today's session, we are showcasing 3 of our sustainability programs. 2 of these are with AICPA and CIMA. There's the newer Oxford Sustainability Reporting and ESG Data Management program that we're looking to talk about to go alongside the existing ESG and Sustainable Finance Strategy program, which many of you will be aware of already. But while the third is our partnership with the Smith School of Enterprise and the Environment and Oxford Net Zero, the Oxford Sustainability program.
Great. Yeah, I'm happy to come back in here and explain a little bit more about the program. So essentially, it revolves around 3 pillars that I just previously mentioned. So around the science of net zero. So we have some leading scholars from the Oxford Net Zero group explain a little bit more about the science of net zero, the strategy, and the standards. And so we walk through in a very interdisciplinary way, much like the way that we do it at the Smith School and Oxford Net Zero, of having this very collection of researchers all coming together to sort of explain what good organizational practice looks like towards net zero. And the week is, I encourage actually some of the alumni to share their experience in the chat if they are able to, but it's really centered around bringing together all these threads that people in the sustainability teams or even in the leadership part of their business will need to grapple with. And so making sure that we both understand the urgency and the needs for immediate change as a result of decades of limited action on climate, but also understanding how you can capture this moment in order to pivot your business in a strategic way and make sure that you're also garnering value from this transition. And so we're running the program for the 2nd time this year, and it's this wonderful collaboration between these 3 institutions, and we're currently accepting applications. So Christine will put a little bit more information in the chat where you can find a way to follow up with our team to put in an application and learn more.
Thank you. So we move it on. So a big part of today is to mark the launch of our newest program, as we've touched on, the SRM program, which is all about equipping professionals to implement key frameworks, where participants will also learn how to integrate ESG data into decision making, leveraging technology, driving business value, and strengthening the governance for sustainable growth. Amir, would you like to give a little bit more information on the overview?
I'll happily do so. Yes, thank you, Alex. But first of all, I should say that the program that Alex is managing on net zero. So if you are struggling with net zero concept, that's the program to go to. It's fantastic faculty at the Smith School, and they're these are our climate scientists and our experts in net zero at Oxford. It can't get any better than that. So I really encourage everyone to have a look at that. But now to our new program, the Sustainability Reporting and ESG Data Management program. So really what we try to do here, and these programs, these three programs are, and some of our other programs, they're complementary, right? So think of them as really focusing on different aspects of sustainability, because as everyone knows on this call, probably these are highly complex problems and they're highly interdependent and disciplinary. So they require different focuses on depending on what you are looking for. In this particular program, we're really focusing on sustainability reporting and the changing frameworks. And in particular, it's not only reporting to external stakeholders. So if you think about reporting to shareholders and other stakeholders, as for example, the ISSB IFRS sustainability standards now recommend and require soon, depending on which jurisdiction you are in, as well as the European ESRS and CSRD requirements that are requiring sustainability reporting for a wider stakeholder set. But it's really also then focusing on internally how to use this essentially necessity of this reporting necessity, which is essentially a compliance burden, and turn it into an advantage, into a competitive advantage, also for internal decision making, for investment decision making, to really inform essentially sustainable investments within the organization. And how to do that, and also how to embed sustainability aspects into capital budgeting and internal reporting processes, internal audits, and everything that you really need internally to make decisions, as well as for the external reporting. So really, there's a kind of four pillars in terms of what we're aiming to achieve. So one is we want organizations to enhance their sustainability strategy, and in particular with a reporting framework in mind, so that everything is working towards really consistent, comparable reporting to stakeholders to really showcase the sustainability features and the business model that is aligned with sustainability to stakeholders. We want to then also, of course, at the same time, have you master the key reporting frameworks that you're reporting towards wherever you are in the world. So whether it's IFRS sustainability reporting standards, whether there's the US, where there's essentially state by state. So California has some, other states have some, and they have the SEC to some extent rolling back some of the requirements. And of course, Europe, which is at the forefront. And if you're an organization or a business that has any dealings with European businesses, you will be touched on it, whether or not you are actually incorporated or working in Europe. So there's lots of different frameworks, and then there's of course the voluntary frameworks that have already existed. So we want to really make sure that you understand the different connections between the frameworks and how the regulations have come about. The third pillar, as I said, is really trying to integrate sustainability and ESG criteria into decision making. This is where essentially the competitive advantage and where the value creation comes from in our aspects. So not really thinking about this as a compliance exercise, but really integrating sustainability into your business models. And then, of course, this course is primarily focused on finance professionals, but others, of course, are very welcome. Finance in the sense of finance and accounting, so CFOs, accountants, and others that work with the finance function to really bridge sustainability and finance. As we see more and more, our sustainability departments are being integrated into core strategy and finance functions, and this is helping your organization to kind of make sense of that. So it's a well, I should say 8 weeks online module. We have 6 weeks of module work. You can access the content anytime, anywhere you want. You have your cohort as with the other program. So there's peer learning, there's feedback from our tutors, there's interactivity, and hopefully we have a great set of we can promise a great set of guest speakers from essentially the regulatory area, so the ISSB, as well as other first-hand accounts of the reporting requirements, as well as other practitioners that share their experience with how they've overcome some of the regulatory burdens and the regulatory requirements. So I'd love to see you on this on that program, and I will hand back to Alex, I think.
Thank you, Amir. So very helpful. Thank you for that oversight. So as sort of previously warned, we're now going to try and engage you with a quick poll, just to gauge your sort of understanding and also to ascertain what you feel is the biggest challenge currently in your business that your business is currently facing in this space. So there's a poll that's just popping up on the screen now. So please do engage in that. The answers coming in as we speak. They're halfway there. I think securing leadership buy-in might just sneak it, but we'll give it a bit longer.
If you can't see the poll, I think in Zoom somewhere at the bottom, there might be an icon that you can click on getting it back up.
While we're waiting for people to come in on the poll, Amir, I'm curious, without swaying people's votes, which do you think is the biggest sustainability challenge?
Oh, that's a good question. I mean, there's plenty, right? Obviously, I mean, I'm biased because obviously the regulation and reporting for me is a big challenge. But I think it's if you look at, I mean, many of those, and many of those actually come together in the
Yeah.
issues that businesses face, right? I think the second one, securing leadership buy-in, right? And I think particularly at this point in time where there is some political, some market pushback against organizations that might actually become a bit more critical, right? Because focus is a bit more on providing financial returns and focusing on growth, particularly in tough times. So that might also be a time where this is becoming a big issue. I don't know. What do you think?
Yeah, I mean, something that we've taken a real interest in is the greenwashing and authenticity, because obviously at Oxford Net Zero we track the net zero commitments of like the 2,000 largest publicly listed companies in the world, of every country and every city, every large city. And so a big part of greenwashing is basically what the distance is between what you're doing and what you're claiming to do. And so I think this is particularly an interest because a lot of litigation is coming out on the greenwashing side. So avoiding risk in that way is really key. So yeah, I'm excited to talk about that as well. But yeah, it looks like the results are in. Oh, and I think securing leadership buy-in has come in at the top. So maybe we start with that and work our way down.
Let's do that.
And in the meantime, would love to hear people's thoughts in the chat as they go through of how they're experiencing these challenges. So yeah, Amir, we briefly touched on securing leadership buy-in, but this is something that we cover a lot in the Oxford Sustainable Business Program, because trying to marry, as you mentioned, the concepts of, the strategic benefits of sustainability action, as well as getting ahead of the regulatory and compliance-centered needs for the business. I guess for me, I found it quite interesting that there's another kind of pressure, which you will know a lot about, is investor pressure, and how investors are responding to the real-time both material climate risks, but also regulatory risks, and how that is sort of pushing their investees to be a bit more responsible on climate, as well as sort of just the general, I don't know, at least maybe from my bubble, general trends towards wanting sustainability, people wanting to work for places that take sustainability seriously, and consumers wanting to buy from brands that take sustainability seriously as well. So I guess for publicly listed companies, there's a number of different pressures, but leadership is also trying to make sure that they survive through to the next quarter. So yeah, my assorted thoughts. I'd love to hear what you have to say.
Yeah. No, I mean, I agree. I think there's a number of pressures, right? And I can understand why people have chosen that particular aspect, right? Because I think it is becoming tricky, right? And it's a bit of a cycle, right? So it's you get easy leadership buy-in when things are going well, right? Because then there's a bit more leeway to experiment and try things out. If things are not going that well, and there's a little bit of political backlash at the moment, there's a bit of market uncertainty that comes into all this. It of course becomes a bit more tricky to think about sustainability, because often it's seen, as you said, as a compliance burden. But I think that's one has to kind of shift that mindset and really show the leadership as well as the organization as a whole, that this is not necessarily a cost, an additional cost or compliance burden, but it's actually really shifting the business model to the advantage, right? To really drive long-term growth and long-term value. Because at the end of the day, I think, as you will see, and as you will essentially, as you said, as investors are pricing sustainability issues into capital markets more and more, and then regulation becomes more stringent, I think you want to not be a laggard in this space, right? So this will really detract. And then there's employee pressure, there is recruitment pressure, there's customers will shift demand as well over time. So I think this is becoming a business case, but this business case has to be made to the leadership, right? And I think some of what we do in these courses is essentially not to just say, okay, we all want every business to become sustainable, right? But we are thinking about, and especially in my case, the way I think about this is, okay, what is the business case for sustainability, right? Can we actually make a business case, and can you then bring that to the leadership and the board and show, okay, we can actually drive long-term value and reduce costs by being sustainable, so it becomes a competitive advantage, in addition to then also deal with the compliance burden. So I think that business case needs to be made, and it's not always the case that you can make that business case for all sustainability issues. But I think, as Alexis mentioned, climate is an obvious one, because it becomes an obvious risk, and regulation is the most stringent here. But there's others that you can think of, and we'll give you the tools and I think the frameworks to think about that a little bit more strategically.
Yeah, it's interesting that you mentioned that not every sustainability challenge has a business case, because one of the things that we bring in on the first day of the Sustainable Business Program is this idea of nature and climate and nature, and how nature metrics and understanding of the risks of nature is just not in the same place as climate is, particularly because there's not sort of these independent units like tons of emissions that you can really have the same kind of clarity of message, because nature, I used to work in conservation before moving more into the climate space, and you can't really put nature down into single units where it's 100% clear that saving nature in one area will compensate for the loss of nature in another area, because ecosystems are so complex. And it's one of the things that we've struggled with, is really making sure that we have enough foregrounding of nature, while also making sure our participants are able to kind of get to grips with the current mechanisms for climate that are already quite advanced, because I think nature is a little bit further behind. There's things like the Task Force for Nature-related Financial Disclosure, but it's not yet at the same place as the climate equivalent was. So I think as someone who also just has a general unease with making the business case for everything, there's lots of things that don't have a business case, like climate adaptation. And we had many participants in our program who are from places in global south or global majority countries who are saying that the business case for climate is just not the same, because it's more about protecting from what will come rather than incentives to, you know, make widgets in a more sustainable manner. So I'm curious to hear your reflections on those pieces as well.
Yeah, no, I think you're right. So there's obviously we start to tackle the issues that we can measure more reliably, and I think that goes to one of the responses. I think the next highest was also the impact, right? The difficulty in measuring impact. And that goes at the heart of what you said, right? So with biodiversity, it's a bit more tricky. And but nevertheless, I mean, there's academic evidence that shows if you believe the way that certain organizations are measuring their biodiversity impact, they can essentially show that there is a correlation between the impact that they have and how investors essentially incorporate that into pricing of the shares. So for listed companies in particular, and there was one prominent study in finance. So the capital markets are starting to kind of recognize biodiversity. They're starting to recognize some of the social issues, and not only climate, right? And I think that's right. But I think interestingly, I think there's a comment I want to pick up because it kind of relates to another comment, another of the aspects that got a high response was the issue on climate, on greenwashing, which you obviously also said is important. And Matthew Steiner is saying that there are different kind of greenwashing and some egregious examples. And I think that is one of the issues that also talks towards getting senior leadership buy-in. Is often the response is, well, we don't want to be seen to be too essentially too positive about the things that we do, because otherwise we are being accused of greenwashing because we have to back it up, right? But back it up with actual data, and the data doesn't really allow us to do that. Plus, we don't sometimes even know what our suppliers are doing. We don't even know, for example, the carbon credits that we're buying, whether it's how we can verify those. So there's the greenwashing is a big issue, and I think this is something that regulation is trying to address, particularly in Europe, with more stringent kind of criteria about what is green and what is not. But as in any innovation, I think there's always at the beginning of the curve, when a lot of new innovative solutions come out, there's obviously bad apples out there. That shouldn't detract from the fact that companies should really try to push and be at the forefront of trying to really report and disclose what they're doing, but obviously be able to, at least to some extent, be able to measure it, but also be transparent about where the issues are, right?
Yeah, definitely.
Yeah,
definitely. And I guess the greenwashing cases that have come to play for the most part have been under consumer protection laws rather than anything else. So it's sort of this misleading of the consumer rather than necessarily being about not fulfilling certain sustainability goals. I guess in terms of avoiding litigation, I guess someone was asking me, which no one is, but let's pretend they are. You know, I would say transparency and being clear about what you're actually achieving versus what you hope to achieve. So we see this a lot with people, for example, or companies committing to a net zero goal by 2050, whereas all the solid guidance on net zero says, okay, you can have a 2050 goal, but you need to set interim targets. So what's going to happen in 2025, 2030, 2035, and so on. In the same way, if I told you I was writing a PhD, I wouldn't just, you know, do it all in one day. I need to write some chapters, I need to have a meeting with my supervisor, et cetera, to put it in the academic context. But, you know, I think we want to see that progress along the way. And we also want to see people and companies being honest about their progress. So if it's that, they were doing really well towards their 2030 goals, but the economic downturn has made it difficult for them to meet that by 2030, and they might meet it by 2032, I think being transparent is the better option, because when you just foreground we'll be net zero by 2050 without any sort of real sense of what that means and what's changing in your business, that's where you're liable to get accused of greenwashing. And interestingly, and with the comment that was made in the chat about carbon credits, there's an interesting case last year in Brazil around carbon credits, and basically carbon credits being improperly generated and the benefits not actually making their way to the communities that they purported to support. And it's interesting that the communities who said that they had never seen any sort of benefit to those carbon credit projects turned around and sued sort of the permitters who were allowing access to the permits, the sellers of offsets, and the firms that allowed those transactions. So Deloitte was kind of famously involved in that case as an advisory role, and then also the purchasers of the carbon credits on the basis of that they had not done sufficient due diligence to really understand where their money was going. So I guess there's also transparency on the other side when you're purchasing something like carbon credits, of really understanding where that money is going and what it is, how it is ending up, because that's the other piece of liability there. And just while we're on the subject of advisory firms, an area of interest for me is this body of work that we call on serviced emissions, which is basically the emissions that are influenced or enabled by professional services providers, so law firms, ad agencies, consultancy firms. And we also see, well, for the first time 2 summers ago, in Multnomah County in Oregon, McKinsey was named as a co-defendant for a case against ExxonMobil for heat damages in a county in Oregon. And they were basically listed as co-defendants on the basis of the advice that they had provided to ExxonMobil. And that's the first time we've seen a professional services firm or consulting firm be a defendant in a climate litigation case on the basis of sort of bad advice that they gave. And McKinsey obviously has been in this position before with Purdue Pharma and the opioid crisis and their role that they played there. But it's a particular area of interest for us because none of the standards really know where to put professional services firms, because they really unlock a lot of emissions and also can unlock a lot of emission savings, but we don't really know where to place them in the standards landscape, or particularly as well in the regulatory landscape as well. They're sort of behind the scenes enablers rather than necessarily being the clients.
Yeah, very interesting, right? That there's this ecosystem around essentially organizations that plays an important role in, as you say, unlocking some of the sustainability savings, improvements, and impact, and they play a big role, whether it's the accounting firms, the consultancies, and others, right? There's third-party ratings providers, data providers, and Matthew, we'll come back to your follow-up comment on AI and the impact that AI plays, and I think about that in terms of KPIs and data collection, and we'll come back to that. In the meantime, we'll probably be interested in hearing from the audience a bit more about kind of the greenwashing aspect, right? And whether you see that with your organizations, is there a bit more reluctance to be transparent on or forthcoming or more essentially ambitious, I should say, on sustainability targets, because you feel there might be danger of being perceived as being greenwashing. So there's this whole notion of green hushing, right? You want to be dialing down what you say, or do you see that there's been then other pressures around that? That would be interesting to hear from the audience as well. And while you put that in, I think one benefit of technology, and I put this broader AI into this, right, is around the data integrity and verification, and even data collection and data production. And I see a role there for AI and technology in large. So I'm more optimistic about advances that we can make in sustainability reporting, KPI, data collection that we need, right, with new technology. So whether that's AI to some extent, I would say it's more kind of, it could be a broader set of technologies, right? So it could be whether it's satellite technology to measure carbon emissions, right, and carbon sequestration, whether it's IoT devices that measure at source, right, and other technologies and AI to make that more efficient in collecting and analyzing these vast amounts of data. I think there's a big role, and AI and technology will be a significant accelerator of the sustainability transformation. I think that's
Yeah.
my optimistic view on AI.
Yeah. That's good. It's good to have someone with an optimistic view. I have a real fear of AI that I need to get over. But it's good to hear kind of the ways that AI can help us meet some of these big data challenges in particular. There's two questions that have come in on carbon credits, and then there's another one that David has put in on externalities and the externalities of climate and nature. So I might just take the credits ones very quickly, and then we can chat about the externality ones. So I guess when it comes to carbon credits, there's been an ongoing discussion about how to generate quote unquote high integrity carbon credits to make sure that they meet the conditions of additionality. So whether or not that project would have happened without the incentive, the monetary incentive of a credit, and permanence. So making sure that there is either permanence in the form of long-term storage. So for example, if it was geological credit, or some sort of permanence of a system to manage a forest, for example, so that you're not purchasing a credit and then a section of a forest gets either, for example, resold, or what might be happening with biodiversity-laden credits is that as we get further into climate breakdown, that their ability to absorb carbon will be compromised. For example, if you sell credits and then there's a forest fire, you sort of sold an area of forest on the promise that it will absorb carbon dioxide, and then it could also emit carbon dioxide into the atmosphere. So I guess in answer to this, there's been a number of developments in terms of how we use carbon credits. There's the Oxford offsetting principles, which give some principles and guidance on how to use carbon credits and how to change them into more durable credits over time. But also there's the Integrity Council for the Voluntary Carbon Market, ICVCM, which is a lot of letters, but it's basically around these core carbon principles, these core principles around what good credits look like. And so these are these principles that they are now going back through and looking at major carbon creditors and seeing, do they meet these requirements, which is obviously a really long process that they're sort of getting into this process now where the first set of carbon credits are being certified against these core carbon principles. But I would say if I were a carbon credit developer, I'd probably look at the ICVCM, the Integrity Council for the Voluntary Carbon Market, look at their principles and understand where do I sit and how much am I aligned with this. So I'll put that link for Sumit and for Bayezid so that you can have a look at that website.
Thank you, Alexis. I'll then take David's question on the externalities that you mentioned as well. And essentially the comment or the question is exactly right? So the core problem is that climate, nature, and other sustainability issues are essentially externalities, right? So as an organization, you produce these externalities and impose them on society as a whole, but you're not essentially bearing the costs. And vice versa, what David mentions is that some investments to improve impact, right, might not the benefits of that might not flow to the investing entity that has all these costs, because essentially it produces social benefits, right? And how do we overcome this? So how do we incentivize? So I think there's a couple of views on this, right? So one is, if you think about these, the whole question is, when do organizations internalize, voluntarily or not, these externalities, right? Over what time frame? So if your view is that regulation will force them to internalize this could be through taxation, through other means and regulation, right? So think about the carbon border adjustment tax in Europe, for example. You can think about carbon taxes or carbon pricing mechanisms. That's one. It could be that economics or circumstances, let's call it socioeconomics, will essentially force you to internalize these, right? So the incentive here is that your consumers might shift consumption behavior in a way, and consumers here in the broader sense, whether that's end consumers or your supplier to a large organizations that is essentially facing their own stakeholder pressure and changing the way that they're purchasing, and they're requiring all these sustainability characteristics of the products from you. So that way you have an incentive, right? So that becomes an internalization of those issues. Or third is that essentially over time, as is with climate, that climate risk, physical or transition risk, becomes so acute that that it is priced in eventually, and that essentially requires then an organization, if it's not done through a market, right, as for example, that's been tried out in the carbon market, that you create an internal market for this, right? So some organizations I've been talking to, they have essentially imposed their own carbon prices internally to make carbon to make investment decisions, right? So capital budgeting decisions. You could essentially also think about imposing your own pricing essentially for your investment decisions for other sustainability issues and embed that then into your capital budgeting decisions. And again, if you believe that eventually those get priced in and will become internalized, then it makes sense to be essentially at the forefront and already, because we're thinking here of investment decisions, of investments that will last 10, 20, 30 years. So there will be benefits ahead of the time. But you're right, and I agree with this comment that that's essentially thinking about all this as a commercial solution, like incentives, and incentives matter in business and capital markets, and this is the problem that we need to overcome.
Yeah, that it's there's so many, as you mentioned at the beginning, there's so many different layers that come in kind of simultaneously. So I can really empathize with people in sustainability focused roles within a business, because you're trying to stave off these multiple problems at the same time. There's actually a really interesting question here from an anonymous attendee. It says, how could we handle sustainability challenge? How could sustainability challenges be transferred into business opportunities where the security situation is unstable for longer periods and may not even be expected to turn into a positive side for, let's say, a decade? Which is a really interesting set of circumstances. And just to do a little plug of my colleague Evgenia Kopytsia's work. She's a Ukrainian scholar who's been visiting us from at Oxford Net Zero for a few years now, and her whole thing is sort of net zero in geopolitically unstable areas. For example, Ukraine is her case study. And we, as part of a different training program I run for young people on the UNFCCC, so the UN climate negotiations, we have a session upcoming on climate change and geopolitics, where our colleague Evgenia is going to be lecturing, as well as a Palestinian scholar and a scholar from Sudan, to be able to understand how climate action looks in insecure geopolitical contexts. I don't have the answers to this, just to point to the work of my brilliant colleagues, but Amir, have you had to deal with that before, where you're kind of thinking about net zero transitions in geopolitically tense
not really, but I do have, as you have had students in these situations, right, where you have other critical issues that are at the forefront of your business mind than sustainability, and becomes a bit of a luxury problem, because there's other security issues that are pressing. But I think overall, all organizations have essentially understood that sustainability is not going to go away, right? So these issues, whether it's climate change, biodiversity, they're not going to go away, and a politically unstable environment or a war is also not going to make them go away. So sometimes, yes, they will be pushed a bit to the background, but they're still there and they still need to be dealt with to essentially maintain your license to operate. And so businesses have dealt with them, whether it's in Ukraine or other jurisdictions where there's uncertainty. But I think priorities obviously fluctuate over time. And you can see this in particular if you look at the World Economic Forum Global Risk Report, and this, which is essentially surveying business leaders, academics, investors about the biggest risk that their organizations face, and they essentially make them rank these risks by probability, how likely it is that these risks materialize and how impactful these risks are. You see a variety of fluctuations of what becomes important in business leaders' minds over the years, depending on what is happening in the background. So whether there's some political uncertainty as it is at the moment, social political risk, economic risk, and so on. Nevertheless, over the past, I think, 10 years now, probably, environmental risks have always been among the top 5, if not all of the top 5, right? So I think that tells us that no matter what is happening, short-term fluctuations, these particularly these environmental issues are essentially long-term problems that we need to tackle.
Yeah, definitely. And I've just put a little bit about Evgenia's work and about the green recovery of Ukraine. But Matthew has also said, have you given any thought to the risk of World War III? War is just incredibly bad for the climate, albeit climate change itself may well increase the chances for war and other geopolitical tensions. This is what we've seen in many places. And there's some really good analysis I'll see if I can find about the impact of the genocide happening in Gaza and how that the war and the amount of bombs that are being cast there are hugely damaging for the climate, as well as obviously for human flourishing and well-being. So I think that's a whole other set of geopolitical issues there. I think sorry, go ahead.
Sorry, and the other way around, right? So as the comment said, that climate change and environmental degradation, extreme weather events might lead to migration, which might lead to tensions, which again, so there's interdependencies that we already see, but we might be underestimating, right, how environmental issues are affecting social issues and vice versa, right? And those interdependencies will only magnify these problems, which essentially, I agree with that comment that that's something we need to be aware of, and that is sometimes underestimated.
There's some interesting analysis actually about water scarcity in Syria and how that really exacerbated the political tensions in the region in the lead up to war there as well. So yeah, it's definitely something that we're seeing, and also in Sudan. So yeah, these things are so intertwined. Just with a view to time, and I know that we've got our colleagues who are going to come in and give a little bit more information about our programs. So maybe just going back through some of the other areas that we didn't chat through in our weaving conversation. I guess we didn't chat at all about access to sustainable finance. Is that something that you want to touch on, Amir? And if that is woven into any of your work?
Oh yeah, that's true. I mean, that's kind of an area that I have been looking into in particular, how financial markets can accelerate some of the sustainability transition. And there's been a lot of talk about that previously, in particular, in trying and seeing financial markets as one lever that incentivizes businesses, in particular those that are dependent on financial markets, to transition to more sustainable business models. Now, that essentially requires a critical mass of investors taking those issues into account, right? So integrating sustainability issues into their investment processes, hence them being priced in. Now, from research that I have done, and I can share some of that as well, which involves essentially surveys and other methods. There's a significant number of investors, as well as a significant essentially majority of assets under management follow some form of sustainable investing criteria, even if it's not called as that. Sustainability is taken into account in many investment decisions. So there's this investor pressure. Now, sustainable investing in the more narrow sense, though. So if you think about kind of impact investing as one niche, or green bonds, green financing, that's a much more smaller. That's a much smaller part of the market, and it's still a fraction of all total assets under management and all financial assets, but it's a quickly growing market, in particular the impact investing side, and where investors are looking at positive impact that is evidenced even for listed companies now. I've done some work on that as well with an asset manager here in the UK, as well as obviously in private markets. So I think from an organization's perspective, if you're thinking about attracting sustainable finance, one of the benefits, and this is coming from research that we have done, is that those investors are generally longer term. They are less prone to be reacting to short-term market fluctuations as others. So there's a bit of more stable funding source, and that can obviously help for long-term investment decisions. But there also requires a different set of reporting and evidence and measuring impact, and which comes back to the comment of difficulties of essentially finding the right KPIs to do that. Very interesting.
Yeah, thanks so much. I'm conscious of time, so maybe I guess before we hand over to our colleagues, I'll give one last kind of overview of the Oxford Sustainable Business Programme. If you found this conversation today interesting, this is a lot of what we do on the Sustainable Business Programme. So take the big challenge of net zero and sort of cut it across multiple different dimensions. So as Amir mentioned very kindly earlier, we have scientists who are talking about it from the scientific lens, really understanding the physics behind climate change and how and what intervention points we'll need and at what time. Then we talk about the strategy, the business strategy behind net zero, and we also talk about the standards and regulation and how that is sort of changing landscape, all intertwined with meeting lots of interesting, like-minded people, spending a beautiful week in Oxford. It's an on-site, in-person program, and getting peers for life. So if any of that interests you, please check out our website. We'll put the link below, and Christine and Tonyelle have also put their LinkedIn, so you can reach out to them with any questions. And Amir, I'll let you talk about your course.
Sure. So I'll talk about the two courses. So the ESG and Sustainable Financial Strategy, that will help you think a little bit more about your stakeholders. So the strategy, essentially, and trying to make a business case for sustainability, and then think about the stakeholders that would be interested in that business case, and including essentially how to think about the shareholder base, engagement with those shareholders and other stakeholders, who they are, how to identify whether they are interested in sustainability, map them, and then try to tailor the reporting towards that particular stakeholder base. And then the new course will take one of the modules of the first course, Sustainable Financial Strategy. So the sustainability reporting will take one of the reporting modules and dig deeper into the reporting requirements, the regulations around it, the changing and evolving regulations. As we were developing the course, there was significant changes, so I had to actually change the course content as I was developing it, while the EU was coming out with the omnibus proposals and so on and so forth. And so it is up to date. So you're at the cutting edge of what is happening right now in that course. And then it will essentially help to think about, as we said, in what you would need to think about when you're internalizing essentially the benefits and costs of sustainability and sustainable investment strategies, in terms of capital budgeting decisions, the reporting requirements, and the the resources and infrastructure needed, the internal controls, how to set up the internal controls, the auditing requirements, and so on, to be essentially assurance ready at the end. So I think with the 3 courses, we'll cover the basis, all the bases that you need essentially to start launching your sustainability journey and the transition and essentially the transformation of your business. So we'll hope to see you on one of them or all of them.
Great. We'll hand back over to our colleagues.
Thank you both. So that really just leaves me to say thank you to the panel for joining us today and offering us their time and expertise. Just as we bring this to a close, there is actually a 10% discount code that we'd like to share with you on the 3 programs that we've discussed. So I'll just hand over to Bex from our marketing team to tell us a little bit more about that.
Hello, I am in that lovely awkward phase where it won't let me share my screen. Why are you not letting me share my screen? So also the code is Earth Month 10. So that does get you 10% off your course fees. I'm still trying to find out how to share my screen. For some reason, the button has gone that I had earlier. So apologies for that. So that is 10% off all of the courses. So with the 2 online ones, you can just, there we go, Christine sharing her screen, excellent. So 2 online ones, you can just use that code straight into the cart. With the Oxford Sustainable Business Programme, you do need to write the code in your application. And then if you also see below that, you've got the QR code to scan the terms and conditions. So this code is only valid for the month of April for the whole of Earth Month. So you need to use it before the end of the month. And obviously QR codes are there so you can scan them and get straight to the program pages. Otherwise, we started putting them in the chat. And then on to our last slide. If you did want to contact any of the team to talk about the programs in more detail, you've got Alex, who looks after the 2 online programs. You can share his QR code. Otherwise, you've got Christine, who looks after the in-person program. You can scan her QR code. So yes.